Well. I hear that General Motors is going bankrupt. And you want to know why? Because Tesla killed it, bro. Welcome back to Strongman Personal Finance. So there's this clown named Farzad Mesbahi, okay? And this guy thinks he's such a freaking genius that he knows how to read financial statements. Why? Because he can. I don't know. And I always hear about the death of Tesla and the death of General Motors, or not the death of Tesla, the death of Ford, the death of General Motors. Every single legacy automotive car company is going extinct. Tesla is slaying absolutely everything. But when I look at these companies, I don't see destruction. I don't see the end of the world. As a matter of fact, I see like pretty decent year-over-year revenue growth. I see positive operating cash flows that are increasing. I see a lot of positive things for legacy autos. I don't see imminent bankruptcy. Okay. Now, GM's financial statements are, well, I guess these aren't the actual financial statements. This is like the earnings deck. I can't wait for the actual, like, maybe they do have their 10K out already, but this is freaking ugly. Okay. It's kind of hard to see what's going on here. But what I want to cue you into is combined revenues for 2022. That's this number right here, 156 billion. And then combined revenues for 2021, 127 billion. So it looks like automotive revenues or total revenues have gone up by about, what, 20 billion, $30 billion, $30 billion. Oh, it's dying. It's dead. It's over. Oh my God, GM's doomed. Now, when it comes to automotive revenues, they've gone from 113 billion to 143 billion. That's a $30 billion swing. So basically all of their revenue growth came from automotive. GM Financial is actually down a little bit when it comes to revenue. Oh, wow, that's a dying company. Okay. So total revenues for 2022 were $156 billion. Now let's look at the, wow, they already updated it. I like that. That's nice. Let's look at the prior years. 155, 134, 149, 145, 147, 137, 122, 127. Oh, wow. It looks like they're actually not going bankrupt, or at least not on the surface. At least their freaking revenue's going up for a dying company. Okay. I guess we could use this since this is ugly. I don't like this. Let's go ahead and look at their gross margin. Their gross margin is 13%. And remember, they appeal to the masses. Okay. They're not like a stupid luxury car company like Tesla. It's freaking garbage trash company. Tesla, that goes up, bro. Okay. Their gross margin is not bad. I mean, it's actually a lot higher, or at least decently higher than most of the years before that. Looks like their average gross margin is like, 11, 12, something like that. Their most recent annual gross margin was 13%. Okay. Operating profit in line, maybe a little bit higher than normal. Profit margin about in line with their normal profit margin. And their free cash flow margin. So they've actually gone from negative free cash flow margin, like in 2017, 2016, 2015. They now have positive free cash flow. Oh, wow. What a dime. So they're growing revenues. They're growing revenues and they're profitable and their gross margin's going up. Oh, man. They're so screwed. Let's look at their net income. All right. Their total net income was $9.9 billion. That's down a little bit from 2021, but massively up from all the prior years. Okay. 6.7, 6.4, 8. I don't know. They seem to be doing pretty good. Okay. Let's look at their balance sheet. So if we look at their most recent balance sheet, they have cash and cash equivalents of $64 billion, and they have total current liabilities of 91. So if all the current liabilities came due tomorrow, I guess they would potentially be in trouble. But if you look at their current ratio, total current assets, they have more than enough current assets to cover their current liabilities. And on top of that, they're cash flow positive. So there will be more net current assets flooding into the business. Okay. So their current ratio, the bankruptcy ratio, is in line with how it normally is. Its current ratio is usually in the low ones. Okay. I don't see like I don't see imminent bankruptcy here. What's going on? These people are so stupid, man. Okay, long-term assets 163, long-term liabilities 100. So they are not underwater when it comes to long-term assets. They have more long-term assets than long-term liabilities. That's good. Okay, you don't want to have more long-term debt than long-term assets. You want to have like your buildings and stuff be worth more on your balance sheet. Or in your property, plant, and equipment be worth more on your balance sheet than your freaking debts, obviously. Okay. And they have growing shareholder equity. Look at their equity. It goes up every single freaking year. That's not a dying company to me, okay? And how is their equity increasing? Well, their equity is going up because of profits, profit and loss. Their common stock balance and their equity part of the balance sheet is basically flat, so they're not really issuing a ton of shares. Retained earnings is going up. That means they're recording profits. And accumulated other comprehensive income is going down. So they're having some kind of gain that's not, or they're reducing their accumulated other comprehensive loss that is off the income statement. I don't see death here. Oh, but Tesla is a robot, and Tesla, yeah, the future, bro. So here's where Farzad Mesbussy, that incompetent Tesla shilling moron, made a massive error, okay? And we're going to look at the exact same thing that he did because this is a lot easier to see it. But Farzad Mesbahi, if you don't know who that is, he's this Tesla shill, right? He doesn't want to work a real job, so he can just shill Tesla, okay? I mean, that's how you do it. Now, if you look at GM's combined cash flow statement, you see net cash provided by operating activities right here, okay? You see net cash provided by investing activities right here. So they spent a lot of cash on investing activities. And you see net cash provided by used in financing activities. And then you see the change in cash from the prior period to where the cash is at the end of the current period. So Farzad Miss Clown looked at this and said, oh, well, GM is just losing money. They're burning cash because the net cash used in financing activities is negative. Farzad, you're an idiot, okay? I actually like when a company has negative cash flows in financing activities. You want to know why? They're either paying a dividend, which, okay, I don't necessarily like that, but it's not the end of the world. That's usually a sign the company's doing okay, usually. They're paying off debt. You know, that's pretty good, isn't it? Or they're buying back stock. That's what leads to negative cash flows from financing. But you and your incompetence, because you don't know what you're doing, but of course that's why you have a huge following. You looked and you said, "Well, they're losing money." Well, if you go look at General Motors automotive cash flows, okay, this is their automotive cash flows for the year ended December 31st, 2022. They generated positive cash of $19 billion. That's right, $19 billion. And General Motors was allowed, because they had lots of positive operating cash flow, they spent $9 billion on expenditures for property. They bought a bunch of marketable securities so they could park some cash away. They sold some marketable securities, and they did some other investing activities. I mean, if this was a dying business, why would they be spending $9 billion on expenditures for property? And why would they have positive $19 billion of operating cash flow? Imagine cash of $19 billion coming in from your core business. That seems pretty good, doesn't it? And if you look year over year, so this is just automotive, okay? Look at the cash flows from automotive for the prior year. 9.6. Oh, it's doubled. Good job there, Farzad Miss Bussy. I don't see it. I don't see bankruptcy, okay? I see them paying off debt, buying back stock, paying a little dividend. I see massive positive operating cash flows. I see a current ratio in line with normal current ratios. I see positive net income. I see growing revenue. How is General Motors going bankrupt? but Tesla, Tesla, you don't understand the Tesla. Clowns. All right, let me finish though. I have a freaking headache. Sign up for my seminar. Click the link. It's Saturday morning. If you provided short-term market, we're right, your channel would blow up. I don't care. I just don't care. I don't care about stonks that went up today. Unless it's Tattoo Chef going down, then I care. How do you feel about finance YouTuber B. Hayes? I don't really know anything about him. Didn't GM rip on earnings? I mean, yeah, I heard they did. I didn't really know. I mean, but like what I'm trying to combat is the stupidity, the argument that General Motors is going bankrupt. It's not. They're doing fine. Ooh. Let's see. Wait, are you naked? That's a mystery. I can't tell you. I have shares of Mercedes. Would you mind reviewing when you come out, see if they also going out of business? Yeah, I can, they're probably not. But yeah, I can just remind me. Look at SGL's financial. They own office real assets, and they are worth than their current market cap. It also yields. I don't know. That's something's off about that one. You mean the stock that Brooklyn Truck Stop was recommending, the one that went from 600 million per share to Tesla, bro? All right, guys. General Motors is not going bankrupt. If anybody says that, they're idiots. Okay. I mean, I can't say like in 10 years if he doesn't go bad. I don't know. But it doesn't look that bad for GM now. It looks like they're doing pretty good. All right. Talk to you later. Cheers.